I just want to say hello. I'm Tracy Koa. Those of you that are on here for office hours and you're like, what's happening? Today, we decided to do a capital raise for one of our newest projects, and we'll also do it again Thursday during office hours. So then the following week, we'll resume regular office hours. The way we love to do our Q&A is I've put a link in the chat to a Google Doc. So anytime at all through the presentation, you can click the Google Doc, you can enter your question, and then at the end, we'll go through and answer questions. The reason we do that is it really helps us gauge what are people's questions, keep really good track of them. And so as we continue to raise capital, every project, we just make sure we're answering those questions preemptively. So we appreciate that. And one of us will put that in the chat throughout the presentation. So, all right. I think you all can see my screen with our fractional page. Is that right? I can't see you guys. Sorry. There we go.
Yes.
Great. Thank you for the thumbs up, Brandon. Awesome. And somebody on the team put the link to our presentation on fractional in the chat. That way everybody knows how to get onto fractional and you can see exactly what I'm showing you. If you're considering investing today and you have not been in fractional yet and created an account, you can do that while you're on the call. Kyle is here in the chat. So if you have questions or you get stuck, you can ask a question and Kyle from Fractional can answer it for you. You can view the project right now without an account, but if you were to go to invest, it would require you to create an account. It's not long, takes a couple minutes. You do have to verify your identity because this is a platform used to raise capital. And so they've got rules and regulations they have to follow. So our fractional page has all the nitty gritty about the project. It's got some photos and a couple videos. And if you scroll down a little bit, you'll see where all the details start. Right here, it starts with project lead. We're going to use a little slide deck today. That's just more highlights. And you can have access to that as well. But this provides more information. Great info about our team. We don't go too in depth just for time's sake, but we've got a absolutely phenomenal team. That's how we do this, guys. We could not do this without everybody. Most of the team's on the call, but you can learn more about everybody. If you go down just below deal overview, you'll see this link. It says gamma.app and then it's the whole thing. If you click on that, that's going to open the slide presentation that we're going to use today. And then you keep going. There's like I said, all the nitty gritty is here on fractional. We'll give you a high level overview today. When you're ready to join the project, there's two places. You could click join the project here or over to the right where it says complete deposit. For you guys, it should say join the project. For me, it says complete deposit because I've already clicked on it once. And so if you click on it once and you don't actually join, then it says complete your deposit because it just means you haven't already. So two places at the very bottom, join project, and then over to the right. Any questions about fractional or how to sign up or create an account before we move forward? Just raise your hand if you do have any questions and we'll make sure we get that answered. Nope. Okay, groovy. All right. So let me change out my screen here. Now, if I'm lucky, you're going to be able to hear the music. If not, you can see. So this is a great short little clip. It gives you an overview of area, the location to where the property lives, and some really nice photos as well. So you got to see some photos and overview. I do want to share with you, but today's project, we're very highly considering a piece of property that our project manager has just visited last week. We'll share a little bit more about that. But that overview you saw, I just want to share this with you. So as we're talking later and you're like, oh, it's a little bit different location, about a mile apart, it's still very similar area. So just wanted to point that out. All right, let's see. Oops. All right. So we want to take a moment and share with you a little bit about myself, Dustin, and Kaipo. We are the founding members of our company and the ones that had the crazy vision to build new projects and start from the ground up. As many of you know, you've met with us and chatted with us. It's been a long time coming. Lots of vetting, contractors, locations, property. You'll hear a little bit more about that. And again, our team is phenomenal. They're the ones that just help make it all happen. I have been in education for 25 years. I was an educator and an administrator. I left that about 3 years ago, and I've been full time in real estate ever since. So I have really the heart of a teacher, the soul of a teacher, and I bring that educational piece to the puzzle, which is why we really lean heavily into making sure that our partners have access to education, you have access to us and our team, and you have access to other partners that are also really like-minded, wanting to grow and actually make change in the world. And so that's super important to us. And I'm really excited as we're diving in and building more systems to share with everybody. It's super exciting. And I also oversee some of the systems and am a CEO. As a lot of you also, I'm a seasoned investor, been in operations, had multiple co-living properties, and I also have multifamily and single family homes as well. I'm extremely committed to affordable housing. Some of you, I won't bore you too much, but I had several experiences in my young adult life with housing insecurity. I grew up leaving home at 15, and as you can imagine, pretty challenging, and spent a lot of time on and off the streets, in and out of just crazy random living situations. And there really wasn't anything in place like co-living to support a young person like myself. I was super motivated, pulled myself up by the bootstraps, as you say, put myself through college, got my master's in education. And through all of that, as a single person, because I was really dedicated to myself, educating myself, and taking care of myself first, I was on my own and it was really tough. And some of the living situations that I got myself into were not great, but it was a result of, well, I could sleep on the street or I could take advantage of this opportunity that's not great, but it keeps me warm. And then I got myself a career and a house and all the things. And then several years later, about 20 years later, I found myself divorced and a single mom with a kid. I had been a stay-at-home mom, so I didn't have a career. And as any of you stay-at-home mom or dad, you go back into the workforce and it takes a hot minute to get your feet on the ground. And here I am looking for housing, and landlords are like, you haven't worked in 10 years and you don't make a lot of money. And no, thank you. So again, I found myself very close to being homeless. And so I got very fortunate. Great guy, randomly crazy landlord was like, I'll give you a chance, right? And we know that that's what it takes a lot of time for folks that are trying to get back on their feet in recovery, whatever the case may be. And so that's what we believe in. We believe in providing beautiful homes that provide people with that opportunity to get their feet on the ground or save some money or whatever the case may be. So that's a little bit about my history. I'm really rooted in strategy. I'm very meticulous, super mission driven. And our goal is to make sure that these projects not only help build our generational wealth, but also yours. We want to make sure that they're really supportive of our investors as well. So that's a little bit about myself. I'll turn it over to Dustin.
Hey everyone, thanks for joining us today. We know it's earlier than we normally do the capital raises, but we want to try something different. Everyone's on different time zones, but a little bit about myself.
Will you talk a little louder, Dustin?
Let me switch.
All right, is that better?
Yeah, thank you.
Yeah, a little bit about myself. I was raised with a military father, so I've moved every 2, 3 years. And through that, I kind of adopted that pattern over time, where by the time I was in undergrad, I really wanted to explore. And so co-living is what allowed me to do that. So I've lived in 5 different co-living properties, ranging from Hawaii to the Mediterranean. And I've learned a lot of like works, what doesn't. Everyone has their own style, but like the co-living properties that I bought along the way with Tracy, with Kaipo, before them as well, I've just really integrated both my background in finance, but also like life interactions. Like, all right, living rooms, they're not for me. So it's been cool to merge the two worlds. studying finance, understanding why co-living is growing in demand, the cost of living increasing dramatically faster than wages, stuff like that. And so this was a really interesting way that I could dive into something that I had a lot of experience in, but also could provide a lot of value to different members of society. And so, yeah, Typo and I, our LLC name is Taco Viva, and that's where all this started coming together as a taco restaurant. And we just started really mapping out everything. So, yeah, Typo,
What's up,
here's some
everyone?
background. How did this start with you?
What's up, guys? Kaipo Kader here. So a little bit of my background. So I'm originally Hawaii, currently reside in Phoenix. So in Hawaii, I built and scaled a ship repair and maintenance company. And in November 2023, I was able to scale myself out of the day-to-day from that company. And in July 2024, moved here to Phoenix and, just work on it full time. Tracy and Dustin, like get back at that story. They came over, they was hanging out at my home here in Phoenix, earlier and we was here for one of Pace's events. We were brainstorming and all the pieces finally came together when we was eating tacos at this taco shop named Taco Viva out in Phoenix. And that's where that came together. And I mean here, right? So for me, co-living, important to me, especially, after working with Dustin and Tracy, and their stories is really deep. I haven't really had any, experience co-living or whatnot, but I mean, talking to them every day, I mean, it is passion for sure. And, I'm a rational guy. And like for me, trying to look in the climate, with the stuff like that and seeing where we are with real estate in the world, for be part of this team and, just to difference, right? Like we all here kind of make it help and provide value in one way or another, right? So, I mean, that's at right now on this team. And particularly in this team right now, my role is to kind of handle it. So, we keep investors updated, with the and communicate with investors, for the moving forward and pre-close as well.
Awesome. Thank you. Dustin, you first tell everybody, I know it says on here that you have a master's in finance. Dustin is so bright and he just brings so much to the table with his understanding of economics, and he is just a nonstop learner. And then Kaipo, of course, you're super humble. Kaipo's experience from his company, like he said, was able to get himself to a place where he just does, weekly check-ins, right? And then you do your quarterly. And he so much of that experience and knowledge that helps our team just grow tighter and stronger and more efficient. And so as a partner with us, our goal is to share a lot of that with you and help model you in your business. So I just wanted to share that. You guys are also humble. Did I miss hold on a sec. Okay. All right. I'll go briefly into the project, just kind of get a little bit. So, this is much more than investment. It's truly a learning opportunity. Our minimum investment on this project is $5,000. And we kind of equate it, all people offer workshops and mentorships and programs, and they all cost 5,000 or more to join. And we thought to ourselves, how can we create a project that really provides a lot of value above and beyond getting quarterly cash flow distributions and, getting when the project appreciates. And we thought, what if we created this opportunity for people to learn from the project? And so that's essentially what we have going on, guys, is when you invest with us, you have an opportunity to learn from us. You get to see the ins and outs. As Kaipo said, we send emails that give updates. You have access to all of us, the team. If you were on, when we started, Francisca had a question that was really a question for Emily, who's our operator. And so, Emily's like, yeah, I got you, responded. So we've got the whole team in place that you get to learn from, and we get to model for you what that like. So not a fund, not a loan. It's a true equity ownership. You're a true partner. Your name or your LLC, whichever you choose to take title, is listed alongside of ours on the title. You're on the HUD. So as you're building up your own portfolio and you're wanting to take out loans to do projects for yourself, when and says, how many projects do you have? Let me see your HUDs. This is a project. We have investors that are on 2, 3, 4, 5 projects with us, and now they have, 3 HUDs to show. It's also an active investment, and what that means is while we capture the operate the project for the 5-year period that you still have the opportunity to hop in and support us and the action as well. It is an active investment. When you invest with us, we'll have a meeting shortly after kind of goes opportunities. Guys, Justin or Kaipo, you want to hop in and
Yeah, I
kind
wanted to mention one part that you started to touch on. In addition to regular HUDs, something that it's changing the landscape. But if you ever want to go down the new builds, you do need new build construction HUDs experience. Like it is under say early on, like pretty much what I hear. But then when it gets down to the wire closing, they're like, wait,
yeah,
you don't have new build HUDs. Like what are we doing? Like, why don't you have these? And then you just really want to emphasize that because it is such a key part of the resume if you do want to go down this route of new.
yeah, solid point. Kaipo, you talk a little bit about the purpose
Yeah,
driven.
what I want to talk about is a lot of this location too. Like right now, the location that we're building in, it's like minutes away from southern, the Texas and the Texas Medical Center, and the address that Tracy put on just now, that's the address, and the lot that
Yeah,
we're looking at right now,
Good
it's even
Hope.
closer to the medical center. And I mean, LD kept, on that more as we move forward. But I mean, it's like medical center with like over 106, 7,000 employees and 10 million patient visits per year or something crazy, just to think about the soul.
Yeah,
The demand is high, right? In that area. Also, it's a nice area. Tracy, Dustin, and I went out to the area and LD, our project
yeah.
manager,
LD's
and
been there several times.
several times and hung out like for 2 days. And we drove around. We looked at everything you possibly can think of to try and convince ourselves not to buy these deals. Like we was trying to find issues, but everything. And I mean, we didn't have time, doing market, looking for
Months.
opportunities and building the team. So I mean, I just want to kind of add that in. I feel like it's one of the important pieces of the deal. And
Yeah,
LD can spot it as we move forward, but that's what I really like about the deal for sure.
I wanted to
yeah.
mention real quick
Mhm.
before we jump slides, right where her mouse is, it says Investor Mastermind, 50K
Yeah,
investors
yeah.
up
Talk about
only.
that.
Anyone that's been with us a bit, they have seen that continue to climb. Um, it's, I don't know next time it's going to climb. It is relatively soon because we want to keep the group tight, intimate. But what that is essentially it's either I'm thinking twice a year. Is that what we agreed on, guys? Like fall,
Yeah,
spring, where we're going to be going to Hawaii and really diving into with these partners, like exactly to build your own team. Like our team's 11 people, so there's all different time zones, different countries, and so there's so much momentum that's always in play. And that's, as Tracy mentioned at the beginning of the call, the team, the true magic of all of it. And so at that mastermind, that's what we'll dive really deep into is like our org chart, OPs, the KPIs
yeah,
for each person, who reports to who, anything like that you could think of.
yeah. I was talking to Stacy earlier today. I saw her on here, and we talked about the mastermind. She's in the mastermind with us, and we really, again, going back to that piece of education and how can we support people. We truly cannot be any competition when it comes to affordable housing. I mean, that's like every one of us could have, a 10,000 affordable portfolio, and we're still barely scraping the need for housing. So our goal really is to help folks get to a place that they feel super confident they can do this on their own. They've got partnerships with people that are like-minded and just oriented and driven. So that's part of why the mastermind was created. So guys, what we have right here on this slide deck, this is our typical 10 bed, 10 bath ensuite. That is a 3-story building. It has one main kitchen, 2 kitchenettes, a washer and dryer on the top the top and bottom floor. We'll show you some pictures about that. But these are truly purpose driven. Our builder, again, we've over 6 months. I can't tell you how many contractors we met with in person. We talked on Zooms. I mean, we went in properties all over the country. And when we met our builder, it was just pure synergy. He is community like we are. He's very passionate. LD will speak about this in a little bit because he was with him not just last week. And, they were finishing touches on one of their properties. Our builder owns some of his own properties. And he just spoke to how meticulous he was and how they want these to be beautiful. So everything is, just a little extra touch so that people really feel at home. So again, I want to make sure I saw a few people in the chat that said, I've got some money I want to invest. How do I invest? I wanted to make sure that someone on our team or Kyle can check you guys and make sure you've got what you need. Again, you go to fractional and if you're in the presentation, you can actually click here. It'll bring you to fractional, but why don't we put the fractional link in the chat again? So if somebody's ready to invest, you can do that right now.
It's in there.
Oh,
We
good.
got it
Okay.
in there.
Okay, I can't, so sorry, guys. I can
No
see
worries.
just a couple folks. So the land is about 170,000. This particular property, I don't have the number yet because we haven't locked it in. On our previous projects, most of them we actually buy the land up front, and we may do that with this project as well. And then we just reimburse ourselves after we get funded. The building cost is 360,000. On this project, we're raising 375,000. We'll go into that in a little bit more detail in just a minute. I want to show you a couple pictures. Each home is custom inspired with a theme. I'll get to pick the theme. I tried to pick the theme. I was shot down very quickly. Our gal that does all the themes, I asked, she's like, I didn't even finish my sentence. She's like, nope, that's my job. So this particular house we have photos of, it's not our house, it's one of our builders' homes. And this is called the Art House. And they do such a great job. Each room is labeled as an artist. This, that upper left is the Picasso room. And you'll see the second bedroom, it's got a Van Gogh mural. That's a Van Gogh room. I forget who the bottom one is. I'm drawing a blank on that artist. And then you get to see a picture of the kitchen, all that art on the wall. They actually made a donation to the local, and they got some art of it and they hung it up in the art house. So again, just beautiful touches, really thoughtful design and meant to, really just, and again, these are 10 bedroom, 10 bath en suites. I'll show you a photo of the bathrooms shortly. Again, really we love that everybody has their own bathroom. Dustin, you want to kick this off?
Yeah. Yeah. So on LD, he'll dive into a little more. We are real excited about this specific property we're eyeballing on this raise. It is a different floor plan, and it's even closer to the medical university. And so I mentioned that in this financial overview slide because the numbers that we're expecting, the medical center, it's 106,000 employees. That doesn't include any people staying there, occupying it for different treatments. And so we are going to list with pad split. However, we are going to make it very known to different contexts. Tracy and I were talking yesterday with one of the mastermind members. She's a doctor. Like, hey, how do we really make it to this this hospital, that we're providing quality housing? And so the numbers based on here are pad split. They can go up, they can go down, but with the hospital, we are optimistic. The main thing to point out, because we really like to hit on cash, it's applicable to some people, not others. Some people call tax benefits, others don't. So the cash on cash 8%, we really like to aim for that 7, 8, 8.5, because it matches pretty close to the historical average of the S&P 500. So like in the chat, we're talking about IRA, self-directed. In reality, everything I've studied about the financial markets the past 11 years is most people, they really should just park their money in the S&P 500 if they're in the stock market. And so this is really close. Some people nitpick distributions and compounding, but this matches it pretty well. And this is like the past 90, almost basically a century. And so we like being able to say, hey, we're taking into consideration vacancy, maintenance, electricity, these things, underwriting, and then that's coming up with the 8%.
Yeah, and we'll
And
show a
so,
real breakdown of that in a little bit. Just want to say that.
yeah. And so 8% come cash, that's the annual cash flow. And then you do have the benefits of the upside appreciation, the debt pay down, and stuff like that. Regarding the cap rate, so this is something that Tracy and I have been talking with Pace Morby, and it's something that we're very interested in basically pioneering. And we have a lot of confidence and evidence. It's not if, it's reality. When the appraisal comes in and they're comparing our 10 bed, 10 bath, one kitchen, two kitchenettes, two laundry rooms, but the comps are a 3 bed, 3 bath. So like we look about this and we're like, all right, is it reasonable? Because he has white hard money companies, like he's very into with this. Is this going to be valued in the near future? Like, is it reasonable to say this is going to be small multifamily? And so that is how we're deriving this 900. And then the cap rate is from comps within the area.
Yeah.
And so that's how these numbers are derived. But always, anyone that wants to hop on a call, Tracy and I,
Yeah.
we set a calendar Monday through Friday to hop on investor calls. So
Yes. Yeah. So please, like I said, to do because we really want everybody's time. We know everybody's super busy, but anything you have further questions about, do not hesitate to reach out. Again, we love. I was telling Stacy today, like we just love chit chatting, and we'll talk all day about co-living, and we'll break down shortly. We'll also break down the all the guys. This is just kind of an overview. Again, just bases that really our goal is, connection, comfort, having strong tenant relationships, and lease stability. So just a few other photos. You can see that it's not your typical, Amazon black. I mean, yeah, they're bed frame, but just unique. Left, you can see the bathroom, just fantastic, all tiled, rain head shower, most of the bathrooms. Again, every house is a little unique, but all very, very similar. LD, do you want to talk a little bit about Houston? LD is our amazing project manager. Truly could not do this without LD. We only decided to move into new build construction because he agreed to support us on this. We've worked with him on many, many projects, and he will not tell you this, so I'm going to say it. He retired in his early 30s. He's got a multi-million-dollar portfolio. He did, your first co-living was in the late 80s, early 90s?
2008.
All right. See, I got the eight. It's the dyslexia, guys. There you go, 2008. It's most of us. Anyway, and he's just tons of flips, and anyway, great experience. So I'll stop talking and let you take it away.
Yeah, definitely. So the thing I'm most excited about these new builds that we're doing is the Houston area. For starters, they've gotten rid of their zoning regulations, and so it's bringing a lot of opportunity. And I seen in next there's a few people that are asking about the zoning, if it is zoned for split, and it's basically yes, it's zoned for split. These are coming in, but we are new to the market. And Dustin likes to talk about a lot about the blue ocean, the opportunity, since we are the first ones going in there. There's just so much opportunity. And this Good Hope address, I drove up and down the streets for a couple days with our contractor. He was showing me everything about the area, giving me all the backstories. This specific property is not next to the first area that we were going into. We've got a couple others that we're doing, wonderful areas. This one actually will enhance to that portfolio already. It's closer to the med center. And Dustin and both Kaipo talked about it. They said around 106,000 employees. It's actually 120,000. So it's a behemoth. We've talked to our pad split rep, and as soon as this goes live, I think she said there's one other pad split in the area, and it's 100% occupied. And so the moment this goes live, it's just going to fill up. And
Yeah.
I mean, it's really, really good. The last slide that you had up, Dustin was talking about the numbers, the cash on. just recently, our I don't want to get political, but our president just signed in the big, beautiful bill, which is several $trillion that they are going to print. And these numbers are very conservative because when that money starts coming in, it goes into assets. And so these neighborhoods that we're going into that are being not regentrified, they're being rejuvenated. And we're the first ones in there. A lot more people are going to be coming in there because the money is going to be flowing and they're all going to be going into these assets. I don't want to make any claims on numbers, but things are about ready to take off. And this area that we're going into has so much opportunity. So am I missing any, Tracy?
No, no, that's fantastic. And again, we looked at lots of different locations throughout the US. We worked really closely with Audrey. She's on our team. She works for Pad Split and also works alongside us. And so she's got the inside scoop. And we really dove into several different regions in the US. And Houston, not only do the numbers work, but there's a massive need, massive need. As we mentioned, our goal is not necessarily to focus on the hospitals, but we probably at some point will have a home once we build relationships that can support not necessarily even just employees, but there's families that come from all over the world to this large medical center and they need somewhere to live, right? They might be there for months at a time, caring for, being with a family member. It is really important to us. Again, that location is huge. I want to take a sec also and just give an overview again of the equity partnership and what that looks like for you. I know the last time that was a couple of the questions people had. So you invest with us, you are a partner, you or your entity is on the operating agreement that holds the title. We voting. So when major issues arise, it's not just that makes that decision. We all vote together. The ideal hold time is about 5 years. And that gives us the opportunity for the asset to stabilize and to build up enough equity and appreciation that we can go ahead and make a choice, again, as a partners, to sell the asset or to refinance the asset or, whatever they can be. Between now and then, as a partner, you get quarterly cash flow distributions, and they're going to be based on your investment amount. If you invest $5,000, you'll get $5,000 worth of your return. If you invest 50,000, then you own more of the asset and you'll get a higher distribution. So quarterly distributions. We always keep a really large reserve, about $20,000 in all of our projects. We really feel very strongly about that. That's been a model of mine for many years. However, these are new builds. We're also accounting for maintenance. And so we again, as partners may decide at some point, gosh, guys, this is brand new. Things are going great. Why don't we just look at holding 10,000 in reserves, right? Let's say we do the project and there's some extra money. Maybe we are under budget from the project. Any of those go into our reserves. And when it comes to a distribution, we again, as partners, have the opportunity to vote on what do we do with that excess earnings, right? We could pay down debt, we could take it into distribution, whatever the case may be. So if you still have questions about the equity partnership and what that looks like, please put that in the Q&A forum. That's, again, we'll answer that question towards the end, and it helps us make sure that we're answering people's questions preemptively. All right, let's see. Whoops, photos. All right, here's our breakdown of the pieces of the puzzle. I'll have Dustin go through this. I just do say that Dustin and I are very conservative underwriters. Kaipo as well. We all over this, and it's something that we take very seriously. We never want to come in short. We're always looking to come in above. So, Dustin, if you want to kind of share this and even show a couple of the places where we kind of, are extremely
Absolutely.
over conservative.
It's funny. It's worth mentioning too. LD the project manager who was speaking a bit ago, he is the one that's overseeing the draws, like tracking things, right? He's probably the most conservative out of all of us.
That's
Um,
true.
so it is worth highlighting. That's who's tracking these dollars and pennies moving around on the deals. And so
Yes.
a couple of the things, a lot of these we have touched on, but some of the ones I wanted to point out, the vacancy is like this part of Houston, it's actually better. I think like 93, 94%. We're two properties, but it sounds like we are leaning more towards the one that's like right on the of the medical center. But like one of the Tracy was mentioning is we already do have a $20,000 reserve built in. So it's like we can, as a team, as partners, decide to not set aside an additional 400 each month. Like we could take it in a quarter by once it's stabilized. Um, and then this, if we really wanted to make this like a higher cash on cash and stuff, we could try to aim for a 75% LTV. It actually does boost the ROI and a couple other factors. But we are using a very conservative LTV. It's typically closer to like 60%. And so there are multiple safety nets that we've built in here.
Yeah.
Let's see.
Appreciate that. Again,
We want
go for it. You go.
we want to jump on, or was
Yeah.
there one other
Yeah,
thing we
let's
wanted to
have
show?
Kyle hop on. So Kyle can kind of go through to invest in fractional. Do you have any questions about fractional? He can walk you through the process. And then Kyle, if you wouldn't mind talking a little bit about self-directed IRAs, that would be, and then gang, I see questions in the chat. If you wouldn't mind putting them in the spreadsheet, that way it just helps us make sure we get everyone's questions answered.
And you know what, before you go on, if you don't
Mhm.
mind, this question has come up in the chat several times. So I just wanted to get this out of the way. People are asking about how long the builds are going to take.
Yes, yeah, we
We're
do have a, but do you want me to pull up the timeline sheet real quick?
you could pull it up. It's 6 months.
Yeah, we
And
can go over it after too.
okay, yeah,
But
yeah.
it's good to answer. I totally appreciate that. Yeah, absolutely.
Okay. Yeah. So 6 months, we are $145 per square foot, which is very, very reasonable. And so those were the two questions that came up a bit. I just wanted to get those out there really quickly so people
Thank
knew
you.
what they're investing in before Kyle comes in and holds everyone's hands.
Really, really great. Good, because timeline is huge. Do you want to talk to them briefly too about our current project in the timeline? Because it's pretty darn impressive.
Yeah, definitely. So nothing's perfect. Did a couple of bumps along the way, but I've for quite some time, and every time I've talked to our contractor and he's come up with a date, I always add a couple weeks to that, and he comes in under every single time. And so we were making some jokes the other day that he couldn't get the whole entire place framed in 1 week. And so the trusses that we're getting, the framing materials, we're hoping to start that by the end of next week. And sometimes he hops onto these calls, so he may be on here. So I just want to know that I don't believe you can get it done in 7 days, and I want my 500 pesos. So
Just in case you're here.
yeah, just in case. So anyway, back to you, Tracy.
No, that's great. That's perfect. Let's give Kyle is ready to
I absolutely am. Shall I share my screen?
yeah, that would be. Do I need to stop sharing mine? Let's
Let's
see.
yeah, maybe.
Yeah. Oh yeah, I can see again.
Hey, there they are. All right, let's see here. Okay, so this is the fractional project that has been linked in the chat. My name is Kyle Brennan. I'm the Director of Investments here at Fractional. If you're not familiar with me, it's great to meet you. Great to see you. Happy to be here. Just internally, I just started calling you Koa and Co, and it really makes me happy.
I love it. You call me anything you want, Kyle.
We're big fans of you guys. Appreciate you being on Fractional. So I just want to talk to you real quick. I saw some questions in the chat about Fractional, about SDRAs and how to invest. So real quick, how to invest. It's all about the blue button here. All the information about their investment opportunity, the club is written down here. Everything they've reviewed is here. So let's focus on the blue button. So click the blue button that says join project, and this is the first screen that pops up. Minimum investment is 5,000. I heard something, maybe it might be going up later, but right now it is 5,000.
Yeah,
And
it's going
then
up. Next
it's
one, it's going up.
going up. Get in while you still can.
Yeah.
That's what that sounds like to me.
And if you just notice, that 40K button just moved up. So we've just got people that are investing right now, which is pretty
Love
cool.
to see it. Love to see it. So if you are new to fractional, welcome. Really happy you're here. These buttons here will say verify. So you do need to verify your personal identity with your social before you can invest on fractional. Once you do, you can then click this manage button and set up a business entity, checkbook IRAs, SDIRAs, 401ks as those investment vehicles. Once you've confirmed your social, then investment vehicles. I'm going to select entity for now and continue to payment. Here you will see that my $5,000 investment, once it loads, there you go, is equal to 1.33% ownership. And that's of the LLC of $375,000. So 5,000 divided by 375. That's my ownership of the LLC of the club that is going to partner with the team on this opportunity. I'm going to pay a 3% lock-in deposit of $150, and that commits me to the project. I am saying, yes, count me in. I'm going to invest with you. I will submit my full 97% deposit in the closing stage. And that's what gets that blue bar, the 40K ticker, to keep bouncing up as everybody invests. You can pay the deposit with a credit card or a bank account. The 97% deposit or investment needs to be paid via bank account, ACH, or wire, cannot be paid via credit card. But go ahead and enter your information here and just make sure you're clicking that checkbox. So we do all the boring work so you can have the fun, learn, and make money. So we'll do the taxes and compliance for the LLC. We'll do the K1s for every investor. And we're also that neutral third-party platform that hosts the club, where you'll be posting updates, casting your votes, sharing pictures, reviewing P&Ls, quarterly calls, things like that. One thing I will mention about the SDRAs real quick is to do that. Here you will select you can you can set up your SDRA info here, and then you'll pay your deposit with your personal credit card. We will then work with your custodian on the closing end to make sure that they release 100% of the funds. When they do that, we will then reimburse you your 3% deposit with your personal funds. So all of the investments coming out of your IRA, and that's where we'll do all the disbursements, so there's no commingling, things like that. I saw some about the fractional fees. So the fractional fees have already been accounted into the underwriting opportunity. Fractional has a 3% transaction fee, and that's on the funds moving through fractional. And then there's also an annual fee, and I believe that fee is getting paid by the actual the property. So that becomes a line item in the property. Really, it's 3% and then the $3,500 annual fee, and then it becomes an expense of the property moving forward. Let's see, what other questions are in the chat? If anybody has any issues with getting their identity verified or just investing, put my email here in the chat. Feel free to reach out to me. Happy to help you in any way I can.
Awesome. Thank you. And then when
Yeah.
Kyle's done, we just want to bring up our partner and advisor, Audrey. We own multiple properties with her. But yeah, whenever you're done.
I'm good. I think we got all the questions. If there's anything else, let me know. Yeah, the annual fee, it's a line item for the business and expense, and that's for the taxes, compliance, K1s, being that neutral third-party platform. I give my seat to Audrey.
Awesome. Thank you. Yeah, so anyone that doesn't know Audrey, she is on our team. We own multiple properties with her. We bounce a lot of ideas off her. She has access to a ton of data that we don't have access to publicly. She works for PadSplit. And so, Audrey, if you just kind of shed light why you led Houston, like what are you about this market? Like what's going
I
on?
was muted. Hey guys, I'm Audrey. Nice to meet you all. I'm super excited to be here. These projects are so exciting. I just kind of want to echo what LD said around Houston as a market. First of all, the zoning laws are much more lenient, which just reduces the level of risk with co-living. And then also it's our third launch market. So it's been around for a really long time. We have a lot of brand awareness there from like Pad's brand, which is exciting. And this area, we only have 45 active units here. So if you're familiar with pad split, you know that, or if you own pad splits, you know that some of our metros have 7,000 bedrooms in them. And so really this is almost kind of an untapped, which is really exciting. And then also the listings that we do have there are almost fully occupied. I'm looking at them right now. I think we have 2 or 3 bedrooms available in this specific zip code that we're looking at. A lot of potential. Product is kind of top tier. We see a lot of, quality varies almost any property on pad split. And I would say quality here is top tier, which these rooms are going to fill quickly and they're going to retain tenants. So pad split works well when all the rooms are filled and we have minimal vacancy and turnover. That's ideally when the property's cash flowing. And a product this is going to be able to retain tenants. And that's literally the most important piece. So
I wanted to address really quick. People are having a problem with the Q&A, and I apologize if I think the link in there, Brandon, thank you. Brandon made a good point. So I guess the link that I shared, Brandon, that is still not good. So I apologize, guys. Let's try. Maybe somebody on the team try that link. That would be awesome, just to make sure that's working. About that, guys. I don't know what I was thinking. I gave like the wrong link. Anyway.
Yeah, I had it should work. If
Okay.
not,
I think that one now works. Anyway.
okay.
Okay.
I know I was looking
I'm
for.
sorry. I had to jump in after Audrey because she was talking about how we're going to be able to retain tenants because it's a high quality product. So you mentioned at the beginning, Tracy. Am I okay? It looked like it froze up for a second.
No,
You
you're right.
mentioned in the I got my first property or co-living property back in 2008. So I've got a co-living properties. They do great. I love them. The difference is these are new builds. So not only does it retain tenants because they're not having issues that an old home will have, but it's a new, so we're not going to have these expenditures. So we're going to get the tenants, they're going to stay, and we're not going to have to deal with a roof that's leaking, the ACs are going out. So it's just there's so in this new build area. So I'm just really excited. I just want to jump in there and throw that out.
Oh no, I really do appreciate that. 100%. Now that we have the right link for Q&A, please put your questions. We'll get to that. I want to really honor, we're just at the top of the hour. Again, all of this is in fractional, plus a lot more. The link to this presentation that we're showing you is also in fractional.
Tracy,
Yes.
before we're done, I wanted to just mention something a little more in detail.
Okay. Yeah, let me do this really quick. I just wanted to share that our last several we filled up in a matter of in a matter of hours, the last couple in a matter of days. So if you are interested and you have questions when we're done here, do not hesitate to reach out. I put the link in the chat to set up a meeting with us. So please just don't hesitate to do that. If you're interested, we don't want to see you miss out. I'm not going to go through this, but again, you can find it in fractional. You can find it on this presentation. This really outlines what we're looking to create as far as our education. I will say it's a work in progress. It's going to take a little time to build up all of this, but this is our goal, is that we'll have a learning vault that all of our investors will have access to, and it's going to contain all of this information so that you can really learn and grow. And then if you're in the mastermind, again, we just take it all to one, take it up. You have the floor, Dustin.
So a couple minutes ago, Tracy mentioned the 5K going up to 10K mastermind. I wanted to like, why would we do that? It's not a sales technique, nothing like that. We've done multiple on fractional, and each one that's 30 people. And so we have a lot of investors accumulating. And part of the, I guess, benefit of investing with us is we do Zooms about the projects. Like LD on our Cranberry deal, he did a Zoom like a week or two ago. And so on these as well, we're hosting Zooms for the partners. There's different back and forth communication. And so just for the sheer volume of people that we're, partnering with, do need to bump it to the 10K just to help numbers that our team can handle as we grow, especially as we are heading into another co-living semesters inside of Sub 2. Tracy and I we're narrowing the dates with them today still. We're really narrowing that down. But as we head into that, we just want to make sure that we can provide as much quality education as we can. And so that's why she mentioned that 5K minimum jumping. In
Yeah.
addition to the mastermind, the same concept. We want to keep it small, intimate, and just help people really build out that next level.
Yeah. Thank you for that. It's true. Elaine, you had a great question. Before we go to Q&A sheet, you wrote it in the chat. I appreciate that. So Elaine was about the annual. I want to explain how that works. So you do not pay the annual fee today. All you pay is the 3% of your investment, and that holds your spot in the project. When it's time to fund, then you'll have an opportunity at that point, then you'll finish the funding. The yearly fee, it's $3,500 a year. That's to use the services of Fractional, which are outstanding. That first fee is included in the underwriting. Okay, so it's part of what we're raising right now. Moving forward, our entity that we're all partners with. So let's say we do move on Hope, it'll be I don't remember, let's say 123 Good Hope LLC. You, me, everybody else that invested, we're partners in Good Hope. We're on the operating agreement. We pay that fee moving forward. So when it comes for distributions, that's part of, oh, okay, guys, it's annual fee. So let's say we have $10,000 in distribution. We're going to take 3,500 out, pay fractional, and then the rest goes distributed to us based on our investment. Is that helpful? Cool. That was a great
Thank you.
question.
That was very helpful. I was a little confused.
I know. I was trying to type it. I was like, I'm just going to tell you.
And then I have one other. I don't know if this is the time to speak, or maybe you have another, but I have this potential property in Atlanta, Georgia. It's co-living and
can I,
looking to get advice.
Yes. Okay. So hold on a sec. So we want to make sure that we're taking advantage of everybody's time right now and not but being respectful. We want to get back and answer some questions for people that have questions about the project. Today and Thursday, we're using our hours time to present our project. And then next Tuesday, we'll go back to Q&A. If you want to text me, Elaine, I'll see if I'll answer your question. That way you don't have to wait till Tuesday. Awesome. I really appreciate it. One last thing real quick, and then we'll go to Q&A. I just wanted to explain what the timeline looks like because I know people do have a question about that. So you put your deposit down today. Then if we don't fully fund today, we'll continue to capital raise for the project. We'll raise again on Thursday. Dustin and I spend time reaching out to interested parties through the week. Once the project is fully funded and we've received $375,000 partnership money, then you'll hear from Fractional, and Fractional is going to reach out and say, and it'll probably even be about a week after the money is raised. So you might be looking on Fractional and be like, woohoo, we did it. We made the 375. It still takes about a week. We get the LLC put in place, right? So that takes a little time. Fractional does that for us. Fractional opens a bank account for us. So there's somewhere for you to wire your funds for this project. Then we create a pre-close agreement that's used for the lender, and we create a JV agreement. Once all that's done, then you're going to hear from Fractional and they're going to say, hey guys, we're getting ready to close this deal. And then you'll get several emails from them that goes to JV, sign the operating agreement, send your funds, all that good stuff. So just want to let you know that there will be a period of silence. You always can reach out. I'll put the link again to book a call with Dustin and I and Kaipo if you like, and we're all to hop on a call with you, answer any questions, or just go, hey, where are we at? And you can email us as well. So just want to give that a heads up. Okay, let's get to Dustin. Do you have that sheet open? You want to get us started?
Yep, I'm pulling it up now.
Okay.
All right. So do we have a couple that just popped up?
Yeah.
Are we learning this project, weekly meetings? So the learning through the project, it's a blend
Yeah.
from AJ. So at a minimum, we're doing weekly update through email, where it's a very extensive breakdown, photos, percentage of complete, milestones, projected next week milestones.
Yep.
And then LD does host different Zooms where
Mhm.
it's like an open floor Q&A with those specific partners.
Yep.
So it's a good blend of different learning styles.
Yeah, and we're all kind of sharing building vault, so to learning vault. And so very shortly you're going to see us launch that, and we've got a lot of information, mostly all videos, and some other as well that, let's say it's a spreadsheet that we're putting in there. We want to walk people through that. We recognize that understanding the numbers is really important, and it takes time to learn that. So we're going to do deep dives into things like that. You'll have videos from all of our team talking about their roles. So that's a work in progress, but it's very close to getting launched. And then, like Dustin said, in the meantime, and even then, you'll always get weekly updates on the new builds, all that good stuff. So I hope that answered your question.
Yeah, it's a
Yeah.
this might be a Kyle question, unless someone on the team knows. They said, my question is, can I put 5K on my business credit card? I know you can do the deposit. I don't know about the full amount though.
Right.
Your deposit, absolutely 97% investment does need to come from a wire or an ACH because it's funding a bank account. If you are trying to liquidate a business credit card, that is totally up to you and for you to figure out.
Yeah, great question. Lee, somebody, oh my gosh, already that is took such a long time for you to get on, and I'm so grateful that you worked so hard at that. So you're an investor on one of our other projects on Drew Street. And timeline wise, and he said, when do you expect the project to be complete? I'll let LD answer that, and then I can answer your other question.
Yeah, so we are on target to finish sometime in December.
Yep. And yeah, love it.
Yeah, unless
And
we
then
have crazy things. I mean, things always, they really do. Our contractor, he's pretty certain that he can do this by December. He has done hundreds of properties. So he's really good. He has a good team. We work well together. They're very efficient. That's what they're saying, but I would hope for the best, but expect it to be sometime in January. And I know the other part of that question, hopefully I'm not jumping in front of it, but they're also asking when the first distribution will come out.
Yeah.
Audrey Hopthon would be the better person to answer that because she's our pad split rep. But I would say once the property is complete, we're going to have it furnished. We're going to do all that fun stuff. And then we need to put it on the platform and we need to get it rented out. That could be anywhere from 1 to 2 months. That's what I'm assuming. But once again, I mean, these are numbers.
Yeah, thank you. So the other frequency, so we do quarterly distributions. So depending on when the project is complete and depending on how long it takes to fill, and it doesn't need to be fully filled, obviously, but I would say, if this late December, early January, and we got it filled, 80%, and which is pretty average in that area, maybe we would have a distribution end of first quarter. Keep in mind too, when we're done, if we have excess reserves, we can also decide as partners if we want to take that as a distribution. Also, maybe we've only got 1 month of cash flow, right? We may all say, guys, let's just wait and do a distribution at the end of the second quarter. So again, those larger decisions will be partnership decisions, but it'll be quarterly. Great question. Let's see. Do you want me to answer Mark's question? That's a great question.
yeah, PMO.
Yeah, I'll at least do the first half. So great question. Please explain the private money loan versus private money partnership from a legal liability standpoint. If we're private money partners and something happens, are we liable? Great question. So as a private money partner, you are on the operating agreement. But remember that we are a LLC, a limited liability corporation. And the reason we create an LLC is because it does limit our personal liability to anything that could go wrong. We also have an outstanding insurance policy as well. And remember, as partners, if there's any piece of the operating agreement that is uncomfortable and you have questions about, we work through that together. You have the option to look over the insurance and you might go, hey guys, let's raise, because it would make, some of us more comfortable, and then we vote on it. But I feel very confident that we carry really great insurance. Our LLC documents, our operating agreements are all drafted by our attorney. We're not like on legal Zoom or anything like that. So we're as protected as we possibly can. One of the between a private money loan, as we know, is you're secured, hopefully, by the real estate. If the project goes upside down, however, right, you have no control over that, no voting control over the project. And if it goes upside down, all you have is this lien on the property that may not even be worth, the amount you. So in a private money partnership, you're a true owner with us, right? And so you are part of a lot of these major decisions. And so you have a say in the project. And I think that's really important. The second part is, does the 50,000 investment also include greater access to you for the pad splits that we want to do ourselves? Yeah, so if you're mastermind, you have full access to, just all the information that you need. But even better than that is we have a Facebook group. You now have access to a group of real performers. These are people that are actually taking action, doing the thing. Many of them have their own pad splits as well. So, we're while field and we all know a lot, we're not the end all be all, right? And so the mastermind is really set up to be a true mastermind where we're all learning and growing and supporting each other. So I think that's really important.
Yeah, we
Yeah,
especially there, we like read any of the information. Especially in that, like it's gonna be very intensive. Like a few of them, they're gonna do case studies of their own projects. We're gonna look at them, like just break down why they did certain things, what they liked about it, what they might have changed. Um, but one of the more unique developments too that we want to show at the mastermind is like how we built 11-person team and like how it runs. Hey, it sounds like you want to do something pretty similar. You can build your own team and scale.
Yeah. Yeah. Thank you. Again, it just goes back to I can't help be a teacher, and Dustin and I want to help everybody. So, these are great. Okay, one more from yep, 8% is the cash on cash return. And then do you have any calculations on return once the taxes are accounted for? No, because
To
yeah,
jump on a clip,
yeah,
only I
yeah.
hear it, Marley and the two babies is getting wild out there, so I don't know how much longer I have,
Okay. Yeah,
but
yeah.
I'm definitely up on that call.
Yeah, I'll put the chat, and if you need to go, Dustin's got a new baby, guys. So if you need to hop off, go for it. There's a couple questions left. I'll probably just stay on for a couple more minutes, and then the questions that I didn't get answered, I'm going to go ahead and put our link again to book a call with us, and we'll hop on a call with you. We basically block out 4 or 5 hours a day just to get on calls with investors. So we'll be able to see you this week. But as far as that, that's really going to be up to your accountant because it's based on your let's see, what else do we have? Da, da, da. About annual fee, return, property address. Sonia, let's go ahead and book a call. That way I can really spend time and dive into those questions with you. Um, Justin, how long will property be fully leased? Right now, Audrey, do you want to speak to that? I want to say it's 30-ish days, but you maybe have a better about.
Audrey already took off.
Oh, she did. Okay.
Yeah.
So
Yeah.
up to about 80% in 30 days, but in our Houston area, it tends to be a little bit quicker. That's what we're seeing. That's what Audrey's seeing. Um, how do you do when, oh wait, let's see. Nope, that's the wrong one. How long do tenants typically stay? Really varies. I mean, we have where people have been in over a year, and some properties where people stay 2, 3, 4 months. With these new builds, what they're seeing is people are staying for much longer, 6, 8, 12 months, and even longer.
This Good
Yeah.
Hope should be actually more of a long term because a lot of the people that are going to be staying there are going to be working at the med center. And so, I mean,
Yeah.
well over.
Yeah. Somebody asked a question too. Why would somebody pick pad split over a studio apartment? In this area, you will be hard pressed to get a studio apartment in a nice neighborhood in this area for this price. But also people love the community. When we were in Houston last time, we were in one of the properties, one of the tenants members was out, we were chit-chatting, we asked her like, why here? Why'd you pick this place? How come here? And she said, well, one, I really loved what it looked like. It felt homey, it felt good. And she said, and I wanted to be around people. They all have Sundays off, and so they actually do kind of family Sundays. So it's a lot of us don't want to be alone. Gang, I think what we're gonna do is I'll put the chat again. I don't want to hold people up. We've been on for a while. Let me put the link so you can book a call with Dustin and I, and we'll hop on anytime. We've got tons of hours available this week, and we can answer all of your other questions. And also reach out to you. I tend to up also in a text message with folks whose questions we didn't get answered. So I might, and if I'm bugging you, just go, Tracy, leave me alone. But I want to make sure you get your questions answered. Sharn, that's so exciting. I can't wait to drink boba with you. All right, gang. We really, again, everybody's time. We know it's late for some of you. We did a job today. We're up to 45,000. This time next week will probably be fully funded. It took us last time just a week, I think. So if you are thinking about it and you have questions, don't hesitate to hop on and book a call. Let us know. Right on. Guys, thank you again so much. Faith, I appreciate that. Thanks, guys. Amazing. All right, gang, have a great day. Janice, great to see you. I miss you.
Awesome seeing you, Tracy. See you soon.
Hi, Kathleen. Good to see you. So good to see everybody. I'm off the screen for most of it. I don't even get to see all the people that are here. All right, gang, take care. David Ross, so good to see you. Thanks for joining us.